Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. It's Thursday, and the market has changed direction. The market is extending its gains. It did go to a positive uptrend, and that happened basically yesterday night, right after the close. We got a follow through day, and it looks as if the market is going to move to a positive uptrend, which is a very good sign. Now, I did do some buying today, basically at in the morning, and then I tried to get a fill on a stock, Occidental Petroleum. That's the one that, by the way, Warren Buffett is buying quite a bit of Berkshire Occidental right now. And as you remember, probably, I don't know if you do, but back when the oil prices collapsed, he loaned Occidental Petroleum a lot of money from Berkshire Hathaway at about 13.5%. And it looks as if now he is extending even his bigger holdings in that company. So very interesting. I tried to get a fill on it. Believe it or not, I couldn't buy it at market price. So that's very interesting. So here's the thing. The market is moving to this confirmed uptrend, which is very important because that means now we can start kind of easing back in to the water. Now, I hate to tell you this, but the tech stocks still are problematic. I'm going to show you 5 stocks that I think that you might like, that looks like they're getting close to a buy point. So just hang on for that, and then we'll get to your questions. But we have moved to a confirmed uptrend. By the way, if you're doing the ETF strategy, I don't know if you do this or not, but one of the things to do the first day that it moves to a confirmed uptrend is a good idea to buy probably is to buy an ETF, an index ETF, and probably the Qs or the Spider. I'll be talking about that a little bit later, but let's just go on the stocks with I bought today. I did buy Hess. Hess moved up very nicely today. It's got a composite rating of 99, and that's pretty excellent when you consider, with a 99 composite rating is quite good. I did buy it this morning as it's coming and reversing up as well. Its volume was up 33% on this, and it is a leaderboard stock for IBD, which is interesting. I do like the oils right now. This is one of the ones I do like. This is in the number one group. The number one group right now in the market are the international E&P companies, and Hess is definitely a member of that. I did buy a full position today in the small portfolio, so kind of interesting. Also, I did kind of put my toe in the water a little bit with another stock. This is Arista Networks. Now, you say, Jim, well, why are you buying? Well, you're telling us not to buy tech, and you're buying tech. Well, I am, and the only reason I'm buying this one is because it's involved in the cloud computing internet space, in the infrastructure space. I do like this area. It is got a very strong composite rating, 96 on this one. It is moving above for the first time the 200-day moving average, and I will show you that in just a second. Let's go to I want to show you uh, the chart on this one. It's Arista Networks. ANET is the symbol on this one. And let's come over there to that one, and we could just take a look at this Arista Networks. This is the weekly chart that I'm showing you now, and I'm going to jump on over to the daily chart. So you can see it came above this reversal line. We did have a reversal line on it, and I did buy a full position, and I got in at 125.38. So I basically made like about 50 cents. Nothing serious, but I definitely got into this one. Arista Networks, something you might want to look at as well. This is an early buy point, but it does have Fidelity Contrafund in there, and so I do like these kind of things. Let's look at the technicals on it. It's just above the 10-day line, so it's getting a little extended. You typically don't want to buy it more than about 5% above that 10-day line. It just closed above that 10-day line. The 10-day line is at 119.57. So it's about 5.38% above that at 125.90. That's where it is after hours. So this if you were to buy this here, this would be an early buy. Don't necessarily recommend it. Does have a good checklist though. 89% on that. So this one looking pretty decent, I think. We'll see. I did put in a stop loss on this one. Pretty tight stop loss. Basically at about 120, 121. So I do have a pretty tight stop loss on this one. Just one that you might want to take a look at. Let's see. All right, these are the 5 stocks that I think that you might want to look at in this new uptrend. And I do have several of them on this. Now, I do own Costco. I bought Costco yesterday. It was looking pretty good. It was up a significant amount. Well, it's an expensive stock, so it was up $9, which is about 1.73%. Down a little bit on the volume. O'Reilly Automotive. This is another super safety stock. And O'Reilly. I don't own O'Reilly. Some of the healthcare companies are coming in here. Regeneron Pharmaceutical and Vertex Pharmaceutical. Those are both very interesting. I don't own either of them, but I am interested in this other stock, GFS, and this is Global Foundries. And there's several reasons why this one is. There's several reasons why this one might be this one might work. And part of the reason that I think this one might work is because of the situation in Taiwan. Taiwan Semiconductor Manufacturing, TSM, accounts for approximately about 40% of all the fabs of all the semiconductors in the world, which is absolutely amazing. Now, if China makes a move on Taiwan, I don't know if that's going to happen or not. I hope it doesn't. But one of the beneficiaries will be GFS. GFS is Global Foundries, and they do make semiconductors for other people. It's just an incredibly expensive business to make semiconductors. You can see this one shot way up, and it's up after hours. It's in the buy zone. So, this one I may be buying tomorrow, even though normally I don't like to, I don't like to buy them when they move like this. But as you can see, right, it did close, and we had a close after hours, right at about 50, right about 73. This is buyable. I do believe this is buyable. So the way I would probably buy this one is on a stop limit order on this one. But this one is looking very, very good. So basically, GFS is buyable right now. Now I don't own it, but this one might be a good one, just because I think it has a lot of potential in the coming in the coming years. I think that it is viable, and I definitely think it is. So for some reason I'm having issue. There we go. Okay, that's why. All right. Takes a little second for it to come up. Well, anyways, GFS is buyable in this one. It's moved up above that. It moved up above that pivot at 73.25. So this one is buyable. It's a very, very volatile stock though. So here's the thing: if you buy this one, you're going to have to set your stops very, very loosely. And this is something I don't usually recommend, but as you can see with this chart, it's all over the place, but it's definitely making a new high. And this one is probably a good time to get into it. The IPO was it's extremely well funded. They did have good earnings. In the last quarter that reported. It's still kind of getting its sea legs, but there's a lot of support for this one. A lot of people need a fab like this to make semiconductors. So this is one that I'm looking at very closely. It's GFS in Global Foundries, and this is one. I definitely think that we could, probably come in on. So for my current holdings, everything was up today, which is kind of nice. Berkshire Hathaway, I definitely own that. It was up about 2.64%, which is amazing on heavier volume. By the way, Berkshire today bought Occidental. Didn't buy all of Occidental, but bought a significant stake in Occidental Petroleum OXY, and I want to kind of go over and take a look at that chart. Um, just so we can see kind of what the reaction was. But this is very interesting. They had lent Oxy a lot of money prior with and it looks like they're gonna come in and buy some more. It's off a little bit after hours, 57.85, but I do believe this is not a proper buy point by any stretch of the imagination. The buy point basically is down here at 35.75. Look at that. It's gone all the way from January from 35.75 all the way up to 57.92. So it's looking kind of like a lot of the people are moving into this one. I am looking at it as a potential acquisition tomorrow. On this one, it's got an 89 checklist, which is very good. The technicals are looking good on it as well. We're only 3.44% above that 10-day line, so we're actually in a place that, even though it's not a primary buy point, it is a secondary buy point, and that might work very, very well. Um, Now, just to show you kind of where I am in the small portfolio, I'm trying to wade in back into the water because we did get that signal, and of course the signal is with the follow through day. We had a follow through day on the S&P 500, so it's not a follow through day on the Nasdaq, but on the S&P. So that says we want to be in some of those. We want to be in some of those commodity areas and maybe insurance. Berkshire Hathaway, of course, is one of my holdings. Costco wholesale, I bought that one yesterday. I've only held it for 2 days. Arista Networks, that's down a little bit, not too much. And then, of course, Hess, I bought that one today as well. So that kind of gives you an idea of where we're at. And again, we did sell the fertilizer company, Nutrien, and we also sold Zim Shipping. Not that they were bad stocks, but we wanted to be taking those profits, and that's kind of always a good thing to do in a volatile market like this, is take profits. Now, I wish I could say as much I could wish I could say as much for my option plays. I wish I could say that they were doing as well as as some of these other ones. I wish I could say that, but that's not true. I closed all of my bear trades yesterday, basically before basically anticipating that we would have that we'd have a fall through day and the market would be moving in an upward direction. I'm glad I did that. Now, the Iron Condor on United Health, I didn't close that one because it's an Iron Condor. It's down a little bit, as you can see. It's still within the it's still within a shooting distance, but as you can see, it's in the red zone. Hopefully, it will stay at this level or lower. If it moves too much higher than this, if it moves above 513.69, then I'm probably going to close the trade or I'm probably going to adjust it. So I definitely have an alert at 513.69 in this one. When we calculated this initially, we had a good potential profit about 63.9%, but you can't always win. So this is this is how the Iron Condor and United Health is doing. So I wouldn't if you're looking for Iron Condor to enter. I wouldn't recommend the United Health one right now because it's not quite doing as well as we would have liked to have seen it. Also, if you are looking to get into the market, I do have a very, very nice ready list, and this has some buy points on it. I haven't completely edited this one, but what you can do is you can get a look see at this one by going to this address, https://bit.ly/DTF0095. And if you're watching on TikTok, very easy to get this to get this trade. Just go to my profile, click on the link, and by the way, while you're there, sign up for the action trade alerts, first and last name and email address, and we'll be putting you on the list. This is all free, and it's a great way to keep up with the market. Also, we do have this great list for the ready list, the March 2022 ready list, and this is really great. All you have to do is go to bit.ly and DTF, that's Dallas Trading Floor 0099. So it's very easy to remember that one. as well. All right, well, let's get into some of the questions. Thank you, everybody, for waiting. I appreciate your patience. We've moved to the new office and I was running around like a madman trying to get everything to work. So hopefully we're going to do better. We're going to do better with getting things to work in the new in the short term. Would Orly make a good bull put spread? This is interesting. Okay, well, great. You're thinking definitely the right way there, Matt. Because now that we've changed, now that we've changed from a market in correction to a confirmed uptrend, you're definitely thinking the right way. You're definitely thinking the right way. This might work, and the one reason it might work is because we're right in the buy zone. And I like that. Cup with handle, first stage. The pivot is 687.23. Let's see. This one might make a very good bull put spread. This one might make a very good bull put spread. Let me kind of see if I can do something here really quick to see if I can come up with a bull put spread for you on this one. Um, okay, what I'm doing here is I'm just using some software to see if we can find a good bull put spread um, for Matt on O'Reilly. Right, that's right. Let's see. Gonna move back over to ORLY. I'm just looking at this chart here and seeing if I can find a good. If I can kind of look to see where I think it's maybe going. I'm looking. I think that this will move up to about 710. That looks like 710 looks like resistance for this one. And let's take a look. I'm thinking it's definitely moving up. And what I'm going to do here is I'm going to pick a fairly short expiry, the 14th of April, and see what we can find out. See if there's anything that's looking good in terms of yeah, okay, very good. I think I have a good one. This is a call debit spread, interestingly enough. Kind of a weird one to look at, but I'll show you this in just a second. Here, yeah, here we go. So, thanks, Matt, thanks, Matt, for bringing this up. And let's see if I can, let's see if I can share out this. Um, oops, let's see if I can get the right one. All right, it looks kind of like we have something that might work for you, Matt. And this is a call credit spread. And the way this thing works is, what you would do for this one is that to open this trade, you would first buy the April 14th 560 call, and then simultaneously you would sell the 590 call. So the spread here is only 10 is only 10. This would cost you $620 out of your pocket for each contract that you do. This has a probability of profit of about 61% based on the software. This is not exact, but this kind of gives you a rule of thumb. The fact that O'Reilly is going upwards is a great thing. I definitely think we could definitely do something there. The maximum return on this is $380 for this trade, and the risk is 620. Now that sounds like, it's not that great, but actually that's pretty darn good considering everything else. What I'd like to show you is sort of the risk profile of this trade. Let's just pull that up there. Yeah, there we go. So the risk profile of this trade. So basically the way this works is it right now O'Reilly is trading right around 680, and if it goes up just a tad, I mean just a tad, we could keep all the money there. So it basically has to move above about $702. And currently, And currently, it's right about there. So, it's right about there. So this one may work very well. This would be a this would be this would be a debit spread. So you could definitely come out of your pocket. This one would cost $620 and have a potential return of 380. And this has about a 61% chance of success. So very, very good, very, very good chance of success on this one. Definitely something that you might want to consider. It looks pretty decent. It looks pretty decent on the on that spread. So it's a call debit spread. Is what it's called. And, if you just, go back and you can see the chart, but, I think that'll work very well because right now we're at 701. This thing basically will work as long as, O'Reilly moves above about 702 by April 14th, and I think that's very likely to happen on this spread. So, let me just kinda show you that spread once again, just really quickly, and we will put it up on the screen for you. Here we go. There we go. Okay, so basically the way you can get into this particular trade is to buy one contract of the April 14th 680 call and sell simultaneously the 690 call. That's a spread of 10. It'll be about $620 out of your pocket. It's varying a little bit. You want to do, remember, when you do this, don't put it in as a market order when you're doing a spread like this. Put it in as a limit order, and the limit would be 6.20. So $620 for 100 shares, which of course the option contract represents. So this one, this one might work very, very well for you. Thanks for that question. That's a great question, and I definitely think you're definitely thinking along in terms of the right thing. Hi, is the market in an uptrend? Absolutely, the market is in an uptrend, and I want to, make sure that I put that out there for everyone. The market is in an uptrend, and it basically moved to this confirmed uptrend from a correction. So, what I like to take a look at first is I look at the S&P 500. This is where this is where um, the follow through day happened first, and let's get that up. Yeah. Okay. Oops, the wrong one. Uh, So that was for the O'Reilly call debit spread, which I think is very, very good, potentially. It's 61% chance, I believe, of success on this one. This, is a and this is the S&P 500 index. It shows you this massive. Yesterday, we had it move above the 21-day line, and it just continued up today. So it's looking very good. It does look like we have had a, reversal, which is great because the S&P 500 was starting to move below. It had a death cross on it. This is a very bad thing. If it hadn't reversed here, this would have gone much lower, but it seems like it got support right here at about 4,200. That seems to be where we got most of the support on and this is when the fall through day down. Now, I want to jump over to the Nasdaq because that is also important. We did not have a fall through day on the Nasdaq, and the Nasdaq Composite is where all the tech stocks live. So it did move up, but it's much weaker than it was much weaker than the S&P 500. So what's happening is there is a movement of capital back into the market, but it is not necessarily going to the techs as much as it did before. It's going to the S&P 500 stocks. So this is why we want to look at the oils. We want to look at some of the shipping stocks, possibly. Those kind of stocks are doing better, definitely better. So, definitely we are in a confirmed uptrend. Just wanted to put that out there. And hey, hello, hello. All right, let's take a question from TikTok, because I have been neglecting TikTok. So let's go to TikTok. Confirmed uptrend based on what? That's a good question. It's a confirmed uptrend based on a follow-through day. And if you want to learn more about the follow-through day, just Google follow-through day, and you'll see what I mean. Basically, a confirmed uptrend happens when it moves when the market is up 4 days in a row on increasing volume. Now, on an index. Now, here's the thing about that. It's a little technical way of looking at that, but the way that works is once there's a confirmed uptrend, then the follow through happens, and then it moves to a confirmed uptrend. We were in a correction, and this is based on the work of William O'Neill, who invented the CAN-SLIM system. And of course, I am a devotee of CAN-SLIM, so that's what I follow, anyways. All right, let's look at Crowdstrike. Let's look at first at Crowdstrike and then at Costco. CRWD is the symbol for CrowdStrike. Okay, CRWD, and make sure that that is indeed coming up there. Well, it doesn't like yeah, there it is. A little bit of lag on my machine today. Don't know why that's happening, but it definitely is happening. It's definitely happening. Here's the chart for CrowdStrike. We're well below that 200-day line, and we have unfortunately encountered the death cross. That's the when the 50-day moves below that 200-day. What does that indicate? That indicates weakness. That indicates a lot of weakness in the stock, and as you can see, and of course, hindsight's 2020. So it's the problem is seeing ahead. It's not seeing behind. Seeing behind's easy. But when the typically when the 50-day crosses below that 200-day, that's not a good thing. We also want to look at the slope of that 200-day line. Even though CrowdStrike is starting to make a move upwards, the 200-day moving average is still sloping down, and that tells me and tells us actually that it's in a weak. It is not reversed and it's not moving. It's sort of stuck. It's sort of volatile. By the way, if you're looking for an options trade in in a stock like this, you want to go with the iron condor. You want to go within a range because you can't really tell with this one if it's going up or down based on the charts. It's sort of volatile within this area. So right now, I have to say, we're still looking for CrowdStrike to possibly move upwards. In the computer software security area, which is one of the better areas, by the way, this is one of the better stocks, but this area has not been performing well. Out of all of the areas of the market, there's 197 of them. This is 109 currently. Let's kind of take a look. I want to show you before I go to Costco. I want to show you which areas are outperforming. It's always easier to go fishing where there's fish, and I mean that's obvious, isn't it? And with the market, you want to look at the sectors that have the best, that are ranking the best. So I want to be looking for sectors right now that are in the top 20% of all of of all the rankings out there. So currently, if we're looking for that, and we were to go over to the list here, we would look and say, oh, okay, well, where are the top stocks? Well, right now, the computer software education is terrible. But if we resort this, going from top to bottom, oil and gas international is number one currently. And that tells us that this is indeed a good time to be looking at oil and gas companies. I mean, this has been the story basically for the first 3 months of the year. It's been very, very strong with regard to the oil and gas companies, and that's not any exception. Right now, international explorers are number one. This is one of the reasons why I bought Hess today, and I probably will buy Oxy tomorrow. So what I'm going to do here is I'm just going to jump on over to this area and see if we can show that. Let's see if it'll let us. It's a little bit of a lag here. Yep. Okay. International oil and gas explorers. Let's take a look at kind of what's in here. Currently, we have some that are coming up. Occidental Petroleum, Murphy Oil, by the way. I don't know if you're probably not familiar with Murphy Oil. Murphy Oil is sort of a company that I became familiar with when I moved here to Texas. It's based in Arkansas, but it's quite a large company, and they have superstores all over the place. That's one to look at. Probably not the right location, not the best chart pattern to buy it in. It's a good stock, but that's probably not working as well. Let's see if I can go back to the oil and gas here and get that. Okay, there we go. Number one, and see if that will come up. There we go. So this is where I also want to look at Oxy. This is the one that Warren Buffett was buying heavily today. As you can see, this one is set up very nicely. This is probably the one, even though it's not at a proper buy point, this is the one you probably want to look at if you're looking to add some exposure to the market. Why? Because this one is set up very, very nicely, and I do think, even though it has earnings, this one is the one. By the way, Warren Buffett is buying large amounts of this. I couldn't get a fill on this stock today. I was a little bit miffed. I wanted to buy it, but I didn't get a fill. All right, let's go and take a look at Costco. Now, this is the one I did buy right before. I bought this one on Tuesday, so because this one was setting up very nicely, and it just seems like, you know, unfortunately, with all this inflation out there, and I wish that wasn't the case, but with all this inflation out there, a lot of people are going to be shopping at Costco that used to be shopping at, like Whole Foods and stuff like that. So this is one that is in the buy zone right now. I did buy a full position here on the 16th. I did buy a full position. I guess that was yeah, it was yesterday. I did buy a full position here. It is moved up. It moved up quite as significantly today, 552, but it's pulled back to 551. I definitely think this one is still viable. It's not quite as good a checklist as Hess, the one I just showed you, but it's still not bad, 78%, and it is looking fairly good. On the pattern rack here, we're basically 1% from the pivot. We're right at the pivot, and it does look like it's going to hold. So here's my take on both CrowdStrike and Costco. I think you got to go with Costco. I think you're going to be that's your better bet. That's your better bet. But they're both good stocks, but you know Costco is what you want to buy. Put CrowdStrike on a hold for a little bit. Hey, John, I'm so happy to see you in this again. What about Box? Let's see if we have anything there that we could look at. I did have thinking about that, I did have a bear put spread on Square, which is now called Block. There are all these things. And I did close that. Not that that would make any sense to you, but okay. I do like the space that it's in, but unfortunately, this is one of the worst areas of the market to buy in, John. I mean, it just really is not doing that well. This is in the computer software database area. And right now, this is kind of like, you know, this is not good. I mean, this computer software database area is performing. It's 191 out of 197, so it is in the lowest part of the market. You don't really want to be buying in this sector of the market right now. Just is not what's working. Oil and gas is working. Agricultural chemicals are working. Basically, your inflation type stocks are working right now. The techs really still aren't working based on the fact that we've got so much inflation going on right now. Steel producers are working, ship transport's working. Medical is a good area to look in. Wholesale drug suppliers, that's where we could possibly look for something. There's only 7 stocks in there, but that might be a good area. But I would not recommend Box. I just wouldn't recommend it. It's just not in the part of the market that we want to be in right now. We don't want to buy in the this area of the market is not performing. Well, so if we were to buy that, even if it was a great stock, we might be we might be very, very disappointed. Um, Basically, what's happening is that there's a disinvestment from tech, and basically what's happening is these many of these high multiple stocks are getting hit because people are saying, "Well, I don't want my money in 5 years, I want my money now." This one actually doesn't have a bad PE ratio. I mean, it's a 30, but, anything under about 25 is that's where the action is in the market. So I would not recommend Box. I at this point, I just I wouldn't recommend Box as a place to park some of your capital. I think you're better off right now with some of the international oil companies and possibly, like an ETF like and possibly an ETF, like the XLE. Let's take a look at the XLE just real quick. This um, this ETF has outperformed just about everything in the last 3 months in the entire market. It's been phenomenal, and this is not even a stock. It's a it's an ETF, and it's just done phenomenally well. It is probably buyable. Now, ETFs are a little bit different than stocks in terms of the way they trade, but this is probably buyable. If you want to get exposure to the market, you don't want to be left behind. I still think you can buy this one because it looks like it's reversing higher. I do see with all this inflation, I do see I do see the oils continuing to do well, and so this one might be something that you might want to look at. I'm currently not invested in this one, but I do like it. It's called the XLE, and it's the Spider Select for the energy sector, and this is what's getting the love in the market right now. This is where the capital is flowing to. So, very, very good. Question from Umar. Thank you very much. This anything changed on MU? And as you know, MU is one of my favorite stocks. I just don't own it right now. Um, One of the things I did like about this one was that for a tech stock, it was a very low PE stock. Now, I'm not normally a PE buyer, but I do think that in the current market conditions, that can be something that works very, very, very well. But right now, what's happening is it went below the 200-day line. It's moved back up. Just a tough stock to buy and hold. It's very volatile. I just right now, it does look like it's getting some support, but I just think we got to wait and see. Right now, if this is just a tough, this is a bucking bronco. Um, the computer storage area is, again, not doing as well as we would like. I mean, it's down there basically at 114 out of 197, so not quite the look that we wanna see on that. Alright, let's, take a look for TikTok. Thank you so much. Just retested. Okay, that's interesting. Okay, CMI. Oh, GME dump. Oh, I wanna look at that. Yeah, this is, of course, GameStop. GME. I'm not in this one, but if you're in it, I think you got to be careful. It looks like people are starting to bail on this meme stock. Unfortunately, yeah, this is not looking good. This is looking. You know what? This is setting up kind of. I hate to say it, but this is setting up as a short. I hate to say that, but this is definitely setting up as a short. I wouldn't be shorting this one though, and because when the market turns to a confirmed uptrend, I don't want to be short anything. So that's my philosophy. You always can make more money on you can always make more money as the market's going up. You can make money as the market's going down or sideways, and I do that all the time. But when the market is in a confirmed uptrend, like it is now, like it moved to the, and this may end very shortly, you want to always be in simpatico with that. So I only want to be doing iron condors and possibly bull trades right now in options or buying the stock itself. So GameStop, I would avoid this one. I just would avoid this one. Part of part of winning in the stock market really is just avoiding massive disasters and capital drawdowns. Really, that's why you have the 7% rule. But I would avoid GME right now. I just would avoid it. It's just not worth getting involved in it. You know, the shorts are back. They're probably going to win. I mean, I know that's terrible, but uh, I think you just need to avoid GME right now. I don't think it's gonna. I don't think it's gonna end up. I don't think it's gonna end up well. I don't think it's gonna end up well at all. Um, and another question from Mukesh. You were stopped out at 95. Yeah, I know this is. These stocks are so hard to trade. They're so volatile. I can see where you were stopped out, and then boy, it's probably good you were because it looks like it's going weaker after hours. And this, of course, is MU, and they're a big manufacturer of they're big manufacturer of memory, and so great company, but tough stock to trade right now. All right, let's see. It's a MU. Okay. So let's see. I'm going to go over here to. Oh, you're looking at potentially a Square call. That's interesting on Square. Now I did have a bear trade on Square. I closed it, and I'm glad I did. I'm glad I did because it definitely, as you can see, that's where I closed it right here. I closed it on the bear put spread. Basically, as it broke through that resistance there at the 50-day line. So I just that was a good try, but not quite. I entered it here on the 10th, and I closed it on the 16th, and it's gone higher. So I'm glad I closed it. I'm glad I closed it. Is this worth a call on this? I wouldn't be. I don't think this is too early. It's trading below the 21 500-day line. Here's the thing. I just don't think. Right now SQ is trading below the 200-day moving average, so no buy. And this goes both with the calls. I think it's a little bit easier on the calls, but I just think if it's trading below the 200-day moving average, and that's this black line that I'm showing you here. This is black line right up here. Is this line here? If it's trading below that 200-day moving average, wow, you don't want to touch it. It's just too risky because it can really you can get really hurt on that. So I would not recommend a call on block. I wouldn't recommend it. All right. Would you do a option call? Yeah, absolutely. Costco, possibly I would. Let's look at Costco. I think options on Costco might not be bad. Now, here's the thing about Costco. It's not Microsoft. It's not, it's pretty slow moving stock. So it's not going to give you as much. It's not going to give you as much bang for the buck typically as buying the shares on the call options. But I do think it's probably going to move higher. Now, how much higher it's going to move, I don't know. There is a buy point on it right at 545.29, 545.29, but it could move above there. But I don't think that you would probably want to do I don't think you probably want to do an option on that one. All right, last call. Let's take a look. Oh, on semiconductor buy point. Let's take a look for on. This is a great company as well. I probably would not be buying the semis right now just because I don't think that it's the right place to be in the market. But this is one of the best of all of the semis, and it's above that 200-day line. It does look like it possibly is reversing. What I'm going to do here is I'm going to eliminate this reversal line that I had on, and I'm going to draw the new reversal line. So right now it's still below that. It's right now it's still below that it's right now it's still below um, the um, the reversal line. So I probably would not buy it at this level. The reason being is that it's still in a downward trend, and it needs to move to an upward trend before we buy it. So I probably would not be a buyer on this. Now, if you did buy it, there is a buy point, and that buy point is 71.25. So there is a buy point out there at 71.25. Um, 71.25 is a buy point, is the buy point for on, and it's basically a consolidation base. So that's kind of the deal. It there is a 71.25 buy point on semiconductor, and it's a consolidation basis, the weakest of the bases, but it's still a base. So here's the thing: I would wait probably to get in on this one. I'd wait to see if it comes a little bit, it moves a little bit better. Here's what I would do: I would probably be looking for it to move above about 62.80. That's where I'd be looking for it to move above before I would consider early entry. But right now I just don't think you can do it. It's not strong enough, and I probably would not recommend. I know I wouldn't recommend doing it at this level. I think you need to have some more strength before you come into it. Well, thank you everybody. I've been yammering on for almost 45 minutes. If you want to get the action trailers, highly recommend that, of course. Very very easy to do. Just go to www Dallas Trading Floor and just need your first and last name and an email address. Of course, it's all free. And if you're watching on TikTok, just go to the and I'm just pointing up here. Just uh, uh, go to the profile, first and last name, and an email address. Also, we do have, of course, we do have the great we do have the access to the 2022 ready list. And this is free, and you can get that easily just by going to https://bit.ly/DTF0099. Now that's also available on the profile if you're watching on TikTok. All right, everybody, thanks again for watching, and I always please, please, please smash that like button because the like button does help us get out to everywhere. So please smash that like button. I really do appreciate that. And also, do sign up for the free action trade alerts. We also have a great trading community. It's the Discord room, and we start every day at 8:30 Central Time, and a lot of people really get a great benefit out of that. That one is a paid service, but everything else is free. So definitely go and check it out. All right, I'll be back tomorrow, 5 o'clock, hopefully. Happy trading.